The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And it is another gorgeous day of summer, June 17th. And a day that it's just rather beautiful outside. A little overcast down here, but that makes it just about perfect. You get out in the sun. It's kind of hot down here in the summer, but boy, I tell you what, the last few days have been just gorgeous. If you had just a shade tree and a little bit of a breeze, actually pretty nice. And of course, we've got a market that's up a little bit, not a whole lot, but it looked maybe a little darker, maybe a little overcast when we started the day today. We went 4 points lower on the S&P cash. We're trading out at 1941.55 on the S&P cash with 1.81 billion shares. We're going to see lighter and lighter volume. And one of the problems when you get into these markets that are very tight and with very light volume going into an FOMC meeting is that you're normally going to have a slight upward bias into, at least on these two-day meetings, the first day. Normally you'll have a little bit of a pop on Wednesday morning and then a pullback and then waiting for all the news. Anything above 1938 pretty much put the pressure on the bears in this market, and very light volume. One of the reasons why I've been talking since last week about don't be short a very quiet market. It is very hard to make some bucks. I had one opportunity yesterday. I wanted to wait till the close today. It already cracked, and maybe we'll get into that a little bit later. I didn't think it was going to crack very far. I just thought that the options on these things were dirt cheap compared to where everybody was placing bets. And I needed a little bit more. I think it moved to $2.50. I wanted to move it at about $5 or $7.50 so that I could turn my dollar into $7. But it was not to be. It is tough. But I think if you're going to be buying puts, you're probably not going to get an opportunity in the morning, and maybe we get an opportunity late in the day. Whether you'll be right or wrong will probably be in tomorrow. But my guess is the option premium prices will start to move up, even though the market is slightly up. Of course, the NASDAQ a little bit better up here today, up almost 0.5%, 43.41.30, and on decent volume, 1.13 billion shares on the NASDAQ as we start the show. And of course, we always like to talk a little bit of history. And I remember this because I was watching it. Testifying before the Joint Economic Commission of Congress, Federal Reserve Chairman Alan Greenspan asked whether the U.S. stock market is in a bubble about ready to burst, says human nature has exhibited a tendency to excess through the generations with the inevitable economic hangover. Drones on, Mr. Greenspan. There is nothing in our economic data series to suggest that this propensity has changed. And that is pretty much it in a nutshell. There's always going to be a bubble, and that bubble will burst. The question is just how long can it go on? And the answer is as long as the government continues to encourage higher leverage and of course, adds additional cash to the what will soon be huge fire and burning of cash that will all go to money heaven. And it happens over and over again, mostly because we don't have a lot of people in politics that like to say no to cash. And of course, while that cash sloshing around pretty much always makes its way to a pocket of a politician. I was looking... I saw an article today that I thought was very interesting, and that was that somebody was paying off one of the political leaders, hired their daughter to be a commentary or a spokesman on, I forget which channel it was. It's one of the big ones, NBC, CBS, or ABC. I think it was NBC, but I'm not sure. But anyway, hadn't been on TV, pretty much a disaster as a national commentator and or spokesman for a national news organization like NBC or CBS or ABC. Put her on a few times, paid her $600,000, and it ended up that she was making for airtime $26,000 a minute. And I think that tells you just about everything you need to know about how to pay off a politician. You hire their kids, and a lot better than cattle features or all the other stuff out there. It does happen. Anyway, it will go on and on. But I digress. What is else? Argentina, we talked a little bit about this yesterday or the day before. I can't remember. Yeah, it'd be Monday. And that is, we've got a phone call. Let's go to John in Philly. How you doing today, John?
Hey, David. I'm doing very well. Thanks for taking the call. I apologize for interrupting the discussion. In fact, I'd like to hear it about Supreme Court and Argentinian bonds on debt default. But my time is limited here on your show. Could I ask you about IWM?
Yeah.
David, it's got... I had bought IWM back mid-May down just over 109, and I got out of my second half of the position today, just under 117. And I had been kind of thinking the past couple of weeks that IWM was likely to head higher. And I just pulled up the daily charts to refresh my memory of where we've come from this year, and I noticed the March highs back at 120, a couple of them, and I noticed back in January there was a high right over 117, and all of a sudden it just dawned on me to consider the possibility that IWM is making a right shoulder top of a larger head and shoulders pattern. And that is not a forecast. I'm not speculating that it is a right shoulder of a head and shoulders top. But I wanted to ask if you could review the power law vector indicator and volume as you see it, and tell us whether or not there's any evidence to either strongly suggest or not indicate a right shoulder top forming here.
In the ETFs, there seems to be some energy. In the individual stocks, it's hard to find a one that has any. So at this moment, we've got these ETFs pretty much driving the market with no correlation to the underlying stocks in it. But yeah, the power law indicator does show fairly decent volume on the way up on IWM and some of the other ETFs that I've been looking at. When you look at the underlying stocks in there, there's just vapor for volume. So basically, we got a lot of people driving ETFs, moving the underlying markets, and no one really interested in buying a individual stock or probably selling it either. So we have a market that tends to be very centric now to indexes that really, truly aren't moving very far. I mean, we've been trapped in a fairly light range in IWM for 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days. Yes. And I don't see that changing. Now, when we look at where this thing's going, is the question in the next few days or in the next 10 days?
Next 10.
Okay. I'll give you the short answer, which is this week, right now, options are absolutely pointing to an expiration on the SPYs at 194, pretty much dead on. So we're 194.29 on the SPYs. So we're within, whatever it is, 0.25%, 0.5% of where options telling us we're going to expire on Friday. So I can see that if you're moving or trying to make any money in the indexes, 80% chance, probably 80 to 85. I haven't looked at the data for the rest of the day. But if we go through today and pretty much expire where we're at or close at where we're at today, and we'll get in tomorrow, the chances are, again, without any kind of major move by the Fed, we're going to expire at 194 on Friday. So I think we've got a sideways market for this week. When we go into next week, I suspect I've been looking for a retest of these highs in a lot of these indexes, and I think it's going to happen by the 4th of July. So I would think that there doesn't have to be a lot more volume. I think we're just going to get sucked right up to 120.58 on the IWM, probably even break it, and there's going to be, at that point, we're going to see whether any kind of volume comes in the underlying markets or it is just a game of ETFs. But certainly the ETF has enough energy in it. Not a lot today, but it has come off this 107.44 bottom with some decent juice. Okay, very good. But I'm still looking for it higher. I just think that we're going to, for the most part, go sideways into Friday, if not just slightly higher. But when you actually look at, did I still have that up? When you actually look at it, you really above, you could probably expire all the way from 192 to 196 maybe on the SPYs. So the 30-point range in the S&Ps probably just noise, right? That would certainly be the way I'd categorize it, absolutely. I wouldn't say it was some kind of signal from God that we're going one way or the other. So I think it's just at this point the background noise in a market that's locked for expiration. And if we do break out somehow tomorrow, there's probably a good case that you're going to see a wildly volatile market. My guess is that we won't move anywhere, though. So I'll be watching. I've been looking at buying some very, very cheap options. And other than that, I can't see actually putting on any more plays. I've got one stock each newsletter right now, which I'm more than glad to sit on, that are showing profits. But it's going to be rare to find a stock that actually is going to move when you have a market that's pretty much stuck as it is. And options are telling us you're probably going to see no volatility till probably Monday, maybe Tuesday.
Excellent, David. Thanks so much, and I'll look forward to listening to the words you've got in Argentina. That'd be great.
Okay.
Thank you, sir.
You bet. Anyway, not a whole lot on Argentina, just a little bit of follow-up, but is important, like John said, to the bond market. Argentina is basically run by a socialist gal. Her name is Cristina Fernandez, and basically shaking her fist at God, saying that it doesn't really matter what I believe is much more important than any reality of us all going down the toilet. But she's not going to say whether or not she's going to cough up the 1.3 or $1.5 billion to Wall Street that she owes. And the question is whether or not they could ever sell another bond until they do.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box.
For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we come back, I'm going to make one quick change out here and save that. You should be good to go. And, I got to get back to the news. I got distracted. I'm easily distracted. Reading some messages in the den, looking at some news, and some of that. Comcast is going to change all its you can eat policy. It has started tests in all of these cities: Mobile, Alabama, Huntsville, Tucson, Atlanta, Augusta, Savannah. Oh, I like Savannah, Georgia. What a wonderful racetrack. Jackson, Mississippi, Charleston, South Carolina, Knoxville, Tennessee, Memphis, and all of central Kentucky, and the state of Maine in its entirety. And what's this going to be? Even though they have all you can stand and all you, all these buffets at the Golden Corral, I always think that they're not all you can eat. It's all you can stand, because the food's not really that good. So it's you could probably eat a lot if it tasted better. It's really all you could stand. Anyway, Comcast is turning down the level of data that you can use per month to about 30 gigabytes. And some people will not affect. If you're watching a lot of streaming video these days, it certainly can start to affect you. Especially would affect me. I'm using 50 or 60 gigabytes a month. So I could see that being a real problem. Yeah, Amazon streaming, Netflix, all these other products. Comcast is coming for your pocketbook. And why that's interesting. At the same time, I don't have it up here because it was just introduced probably about an hour and a half ago. At least that's when I started seeing the news clips come. But there are some new bills that have been introduced in the Senate to go after basically net neutrality, Comcast, and data, what would you call it, data caps. I think that's what it's actually called, data caps. I was going to call it data fasting. But actually introduced today, and I wonder whether or not they are part of this news cycle. But interestingly enough, keep an eye on that if you're in those cities and you have Comcast. Maybe you can tell me if in the near future anything else changes. But need to know that. Now, of course, we've got the FOMC meeting tomorrow. Again, we have that pattern that we've seen so many times before. Normally a slight move up the day before a two-dayer, a little pop in the morning, a fade, and super light volume until the announcement. And, of course, I've seen it two ways out here. Now I've seen it actually reported several other places that have me pretty much thinking that it truly is at 2 o'clock tomorrow. And, of course, then we're going to have a follow-up at 2:30 with Janet Yellen. And at that point, we're going to figure out just what happens to the Fed. My guess is that she says nothing and that she has a deal to say nothing, and why Ben Bernanke got trounced out of there last summer, almost about this time. I think that he was not coming back was announced on 60 Minutes without his knowledge. At least that's what people close to him say, and I don't have any reason to disbelieve. But one of the reasons was he was more interested in raising rates this year. And, of course, during an election year, certainly the president didn't want to hear it. And I think probably some other people didn't want to hear it either when there looks to be like a huge rollover in who's going to be elected and who is not this year. We've already seen, of course, the majority leader in the House get his comeuppance. My guess is that the American people are kind of in a rare and bad mood come November. Apple has finally reached a settlement with the civil plaintiffs. Basically, they fixed the price of ebooks. And this is just one of about 5 things they did. If Steve Jobs was alive right now and there was equitable law enforcement, he would probably be under arrest or indictment for all the horrible things he did. This was just one more thing. Apple is basically seeking a $840 million settlement for all the ebook fixing. And doesn't look like anything else is going to change. But, of course, this is Amazon and Apple, once again, behaving badly. But we'll see. The judge didn't like the last deal, which was a whole lot less. But I think we're going to get this done. Anyway, when we come back, we've got a lot. Start looking at some stocks. You can give me a call at 877-927-6648. And, of course, you can email me at path@tfnn.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
As we come back, it is an interesting day. Just going to check in and see if we've got any market movement. Still up 5 points on the S&P cash, 1.95 billion shares on the New York Stock Exchange consolidated tape. And what else do we have? Hearings today on the Hill, actually, I think in the Senate. More hearings, and it looks like there'll at least be some changes on the margins of transparency in high-frequency trading. If your broker is going to trade against you, if he's going to sell your order or flow to somebody else, it looks at least like you're going to be told that you're going to be screwed instead of just do it. And, of course, one of the guys that is the driving force between IEX, or behind IEX, was on CNBC today, and he's talking up his soon-to-be open exchange to be available. And we'll see whether or not how many people move to it and how that changes the market. Bigger problem right now with other issues. What else? Oh, it is a mad market. It's slightly up, and that's about it. Anyway, we're going to take a look at some of the other things going on here in the market. There were a few other things out here that had opinion on J.O. Thanks, Ken in Wyoming. So let's take a quick look at that. You can be like Ken and email me at path@tfnn.com, or better yet, give me a call at 877-927-6648. Okay. So you came down here, broke the previous low on March 21st, That was at $33.44. Basically had 460,000 shares. You got into that low, and the best volume you could get was 260,000 shares. You've basically popped back into the trading range. Straight technically, this does not look like a bad deal. You've got a doji forming here today, and volume just a little bit okay. It's not huge. What you would want this to do is close above that 33.44. But you've got a pretty good risk reward on this. This is, of course, the Total Return Coffee Fund. Not a bad looking risk reward out here. You did have what was called an automatic rally. That is without preparation. It went below, popped back above briefly, and it's come back out here. But you need a close above that 33.44 at least to confirm a bottom. And what's the 33.18? I'd have to look at the current one if we want to look at it. But to me, you're pretty close out here. You wouldn't want it to go below 32.16 again. So you got some fairly decent risk reward. The background on this would be very interesting. And of course, Andy is back in the saddle today. So maybe he'll talk about the underlying and underpinning of coffee. But to me, you had the big run. This thing's kind of come back around and made a low over here on the right-hand side, and not a bad-looking run. The question is whether or not you're going to get yet another kind of move up to 42.87, or if this thing just goes sideways. And the energy down was 20% lighter, which is kind of nice into this low. So you don't have a lot of risk. I like the setup. The question is, I just don't know about the fundamentals on whether or not coffee is going to be in higher demand, or this thing just goes sideways like the rest of the markets out here without a lot of rhyme or reason. And right now, as I look at it, you've got great risk reward. I can't deny that. The question is whether or not this just goes sideways or it actually goes back up. So I kind of like it. Maybe Andy has some underlying view of the market for coffee beans. I know that there are a lot of problems with diseases and rain, just all the other things that happen with commodities, but I haven't been keeping up with it. But I like the chart, not bad. And what can you say? You know, you don't really have a high volume day out here to really show any kind of resistance until that May 15th high at $38.96. So, not a bad looking chart. There are a lot worse out here. And let's see if he got anything else. I'd say that. I mean, you're into this candle that really did have the high volume, and that was on February 19th of this year, 1.3 million shares. That's going to act as support. You're going to have to get some more energy. And I think a day like today just tells you that pretty much all the sellers are at least on vacation, if not given up. So I like the risk reward. I just can't tell you whether this thing is going to move higher. Hopefully that moves you. What else do we have out here? Anything in the den? Okay. Some of the other things moving out here is the solar stocks. Some of the few out here that are truly moving. I'm going to zoom up on here so we can see them just a little bit better. But you know, we got Solar City up $16. Of course, Elon Musk back on the hit parade of long on bull, short on the substance, both on his Solar City and also on the Tesla product. We'll get into that. We talked a little bit about Tesla tomorrow. Again, there is no money to be made without government subsidies. And, of course, Solar City, a big deal on this. I didn't know if there was any associated news. Let's see if we can see anything real quickly out here. Dives into module manufacturing, protection from protecting. I think this is the reason is a lot of money's being thrown around, or at least talked about being thrown around in New York and everybody thinks that they're going to get a taste out here in Solarville. But certainly has moved these stocks. And of course, Solar City always has a massive short interest in it, and not hard to drive a lot of these stocks. JA Solar up 9%, SOA, which is Rena Solar, up almost 9%. CSIQ, probably the best of the bunch out there when you actually talk about a company that can make money. At what is it, up 7.5%? JKS Solar up 6.8%. So if there is a sector moving out here today, it is the solar companies. And I just don't see where New York's going to get the kind of cash to throw that around, but it doesn't really matter. This is expiration week, and it's always time to run the shorts if you get a chance. And again, why you want to be, why you need a market with some decent volume and not being so quiet. These shorts tend to pile up, and they'll blow you out. And even the TAN, which is, of course, the ETF for this, the Guggenheim Solar, up 3.5%, and probably not too bad. First Solar up 3.5%. But all these solar stocks moving fairly well today. I want to go back and look at a few other ones out here. You know, you wanted to start seeing volume pick up in some of these stocks that had been the weakest. And while you don't have a lot out here, you don't have these things falling apart. IBM is one of these stocks. IBM. And this thing has pretty much come down. All the energy's out of this thing right now. Going to probably have to have some kind of news. Right now, options, I think, go back and pop this up real quick. I think options on IBM are showing 190 or 185 for expiration, maybe a little bit more. Actually, a little bit more. 187. So you have kind of an option bias, and one of the things that you can tell about IBM is it is a fairly decent about following where the options are. One of the stocks that reacts to the prediction of options much better, and this would be up to 188. Of course, that probably could come down to 187.50 or wherever the options are. So I'll keep an eye on that. Don't have a lot of stocks moving out here today. Some of these are up at highs. Climax, or Cimarex Energy, excuse me, XEC. Did we bring this up yesterday? I don't think we did. This thing had a huge pop with volume on the 7th of May. And at that point, 3.8 million shares at 139.90. We got above it today and going to come in with probably half the volume. So we want to be watching some of these energy companies. I'm trying to remember what the story is on Cimarex Energy. Independent oil and gas production, Oklahoma and New Mexico. We've been talking a little bit about it yesterday, and I just continue to think that this, at least on the crude side and the gasoline side, really has me thinking about the highs in 2006 on natural gas up there about 16.75. And just when everything looked like it could only go higher, the wheels fell off. And this one's kind of interesting. WebMD, another one of these stocks up here coming back into highs. WBMD is the symbol on this. Came down all the way to 37.43, did gap up on volume. And what you don't see until the last couple of days is any volume at all. You get the last 3 days, which my guess is a short covering in this thing. You do have this gap down that happened on the 21st of February with 1.7 million shares, and we're at 860,000 so far. Now, a lot of these things are probably in with option expiration. Probably could see 50 on this. My guess is we're going to see it with light volume over the next couple of days. So, if we did have a massive failure, this is one of the stocks that looks to me like it could drop right back in a heartbeat back under that 39.70 area where support lays. EC, what do we have on here? This one did fail. I think we were talking about this a couple of days ago, and just wanted to follow up on it. This is another one that gapped down on energy, 826,000 shares on April 22nd. got into it with 660,000 shares for the best within 0.5% over on this right-hand side of the gap down. Did get into it, did fill most of it, and, of course, coming down on fairly higher volume today. I didn't look at the headlines on this dish yet. Let's see what we have here. Therapeutics. Something to do with Columbia. EXAM, another one of these healthcare stocks. And just to me, it looked like this is another one following almost the same pattern that all these stocks have, which is they blow up, they come down, they come back up here with light volume, and they pretty much come back down again. One of the few stocks actually filling its gap is FTI Consulting. This thing made a kind of a nice little signal out here today that it's got back into the supply line where this thing also blew up on huge volume. That was back on February 20th of this year, 2.4 million shares. This thing gapped down from, 37 something to $29 with that 2.4 million shares. Of course, the last few days as we've come to fill that gap. 1.2 million shares yesterday, 500,000 shares today. And this is where all the people that have been driving these stocks pretty much drop out. Not a lot of people willing to take one for the team and go just a little bit further. I'm going to take a look at some other stocks. You can give me a call, by the way, at 877-927-6648. Wanted to see what we had on Friday. There's a few more wanted to see that are hanging up here and see how they're doing today. Activision, of course, a good quarter. And probably a bright future out here. But again, seeing very light volume during expiration week. And, of course, a pop-up today. Energy is better. Volume is better than yesterday, but still not anywhere close to the previous March 17th highs, 16 million shares. Of course, today, 4.8 million shares. So a lot of these things starting to hit that brick wall of higher prices as we go along. What else do we have? Take a look at a few other. Diamond Resorts, FLT, FTI. I think we talked about that. Methadone Electric. Martin Marietta. I know we talked a little bit about this, and of course I have a feeling that any of these stocks that are up here on light volume probably not going to extensively roll over until we get into Monday or Tuesday with the options rollover. I see 1.6 million shares is what we were looking for, and I think we had a few comments in the den about it. But 650,000 shares, 2-day trading days ago on Monday to 440,000 shares. Looks like it's going to close back below that $130 today. Maybe, maybe not, but you will probably want to watch it. Close back below 130. Does set up a sell signal, at least on the right side of this chart. MLM, Martin Marietta Materials. We'll be back in just a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And we are back. Andy Hecht's going to be on in just a minute. He says he's back in the saddle again. I wanted to play that song. I couldn't find it. Back in the saddle again. Back where a friend was a friend. But not too bad. Anyway, I was asking Andy here before his show when the high in natural gas was. Normally, I just go back to my records and find it, and look at my trades. But I was dealing with a company called Revco, if anybody remembers that. And they were doing my trades, and I think it was 2006, late 2006, when they blew up. And all my records ended up going to attorneys and everything else. I didn't keep copies. And, of course, if I would have asked for them, I'm sure I'd get a $500 bill from the attorneys on it. But I finally got my cash back, but it took about 3 months. But if you don't know who Revco is, it was the people before our current fiasco in commodities trading, and that was, of course, the guys from Chicago. But I digress. Got a linking at here. Revco, yeah. Revco and, of course, MF Global now. Anyway, you got all those people. I was doing prop trading for them at the time. And, of course, I'm just glad I got my cash back. Anyway, we've got kind of an interesting market. I just wanted to take one more look for the end of the show out here on the volume. Of course, we're up about just under 5 points on the S&P cash. Going to see some light volume. My guess is that we're going to have a light volume close today. We're just over 2 billion shares on the New York Stock Exchange consolidated tape. I figure we'll probably be doing 1.2, 1.3 billion shares as we go into the FOMC meeting tomorrow at 2, or at the announcement at 2. And, of course, we're going to get the original reaction. Then we're going to get yet a secondary reaction on the presser with Janet Yellen. And if memory serves correct, last time it ran about 35 minutes. So we're probably not going to see the whites of the eyes of people. If there is any change, my guess is probably no change until 3:10, 3:15. Of course, we'll be live on the air between 2 and 3, and we'll be looking at the changes. But until she probably quits talking, we're not going to probably see a clear direction in this market unless there is some kind of surprise at 2 o'clock. So it'll be probably much more about what the close is tomorrow. But options, very, very tight. So a market that could be up or down maybe 10 points up by Friday, but certainly not pointing to a market that's really open for a huge move. Again, may see that come Monday or Tuesday, an option rollover, probably see some additional volatility in the market. But my guess is we kind of stumble up into that 2,000 mark on the S&P cash into the 4th of July weekend, and maybe at that point we'll have some highs set in this market that can roll back over. Of course, Andy coming on in just a minute. Andy Heck, our number one guy for commodities. Maybe he can tell me whether he has a feeling that this seems very much like the highs in nat gas in 2005. Just feels very puffy to me. Doesn't mean that we couldn't see yet another $5, $6, $7 in regular crude prices. And in fact, I'd love it. I'd love to get some kind of blow off top in crude that we could go back here in short. But I digress. And again, we're going to digress right into Andy Heck following the show. And see you tomorrow, same bat channel, same bat time. Remember, sell when you can, out when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.